But let's try and decode what's happening with the market as well as discuss the latest what's happening at Kotak, because they have launched a latest MNC fund as well. We'll try and decode that with Harsha Upadhyaya, who's joining us on the show. He's of course the CIO equity at Kotak AMC. Hi Harsha, good to be speaking with you. We'll come to the MNC fund in a bit, but before that, it's important to understand what the market mood is reflecting right now. Do you think this is clearly just FI money flowing out of India into China? Is it other factors at play as well? Is it likely to be sideways for a while? What's your reading of the cards?
Good afternoon. Clearly, we have been highlighting the valuation expensiveness of this market, right? Especially at the broader end of the market, where earnings have also considerably slowed down, while the valuations have continued to remain elevated. Given that backdrop, I think it just needed a reason for some sort of a correction, and that's what we are seeing now. Yes, in the very, very short term, maybe some money from India has moved to other markets. That's possible. But I don't think that's the entire reason for this nervousness. If you look at June quarter earnings for the first time in last 4.5 years, first time since COVID disruption, we did see very, very muted earnings growth year on year for Nifty as well as mid and small cap basket. It was the first time we saw a single digit earnings growth on a year basis. While much of it was expected given high base of June 2023, the market reaction was muted because it was expected in a way. However, as we get into the earnings season this quarter, again, we are likely to see once again a muted set of numbers. And given the high valuations, I think that's also weighing on the minds of investors at this point of time. And there has been very strong performance from Indian equities over the last 12-24 months, right? So to that extent, some sort of a cool off is expected. It just needed a reason, I guess.
So some sort of cool off is expected given the run up, but what's the realistic, let's say, return expectation then, Harsha, for the next 12 months from the Indian markets, large cap, mid cap, small cap? Where would you skew it and what should be the expectation?
Clearly, the expectations need to be more moderate at this point of time, and also one should be seeing more volatility than what we had seen in the past couple of years. It had been a one-way street with hardly any corrections or any sideways moves. And given the fact that now valuations are elevated and earnings are also kind of starting to slow down, it could be better if you expect some volatility to continue and also moderate your return expectations, I would say.
So, given that you are still expecting some volatility to continue in the markets, what would you advise investors, or what would you as a mutual fund do? Would you start allocating the excess cash that you have in the markets, given the fall that we have seen, or you would still wait on the sidelines? And if you would deploy cash, which would be those sectors be where you would look to deploy cash?
As a policy at our mutual fund, we do not take active cash calls because once we start doing that, the investor may not necessarily know what exactly we are trying to do and what will be the final allocation into equity. And their intended equity allocation could change. For example, if somebody came into our fund wanting to have a 70% exposure in equity, and if we suddenly take a 20% cash call, then their equity allocation becomes 56, right? So we do not want this kind of an anomaly to happen. So rather than that, we assume that once the money comes into equity-oriented funds, the choice has already been made. And it's our job to then relatively pick better choices rather than keeping cash in the fund. So to that extent, we do not take active calls on cash levels. At this point of time, we have moved our portfolio towards what we perceive as lower risk, or where there is a little bit more earning stability, or where valuations are more comfortable. So that's what we have done, and we will continue to do that at all points of time.
So which are those pockets or sectors where you're seeing a lower risk and more earning stability?
Clearly, some of the segments have not done as well as, let's say, the manufacturing segment overall. That's where we believe probably there is a little bit of cushion in terms of valuation. So entire banking segment, IT segment, telecom, these are some of the areas where there seems to be lesser risk at this point of time. And also, consumption is something where we believe over a period of time things could improve a little bit. Although the urban segment has done very well and probably is going to slow down a bit, but the rural segment is likely to come up over the next couple of quarters. So to that extent, we have moved more defensive in our portfolios from more aggressive positions to slightly defensive positions across the board. And from mid and small caps, we have also moved towards large caps where there is a relative valuation comfort. Wherever the mandate allows, we have done that. So broadly, I think the defensive tilt in our portfolio has increased over the last couple of months.
Okay, so defensive tilt it is, and I think it is that tilt that is the reason why you're launching the MNC fund now as well. But explain to us better, what's the thesis behind it? Are you looking at the the foreign headquarters companies which are in India? Are you looking at the Indian companies which have a lot of global presence? How are you looking at this fund?
Exactly. That's one of the reasons why we are looking at MNC fund at this point of time. When valuations by and large have become elevated, you need to look for stability in the market. And MNC as a theme has always been one of the stable themes. And these are very well established companies which have very strong presence in the nations that they operate in. These are the companies which have seen different cycles at different points of time and maybe in different geographies as well. They generally have technological superiority over their counterparts. And also, when you look at their financial profile, generally their ROE levels are much higher than the rest of the market. There is hardly any leverage on the books. So generally in downturns, they tend to behave much better than rest of the market. And at this point of time, given that there are pockets of elevated valuations across the board in the market, we thought that launching a theme which is a lot more established and stable and which comes with a lower volatility is definitely something that investor would want to look at. And hence, we have launched this particular fund. And in terms of your question, where would it invest into? It would invest into Indian listed companies of broadly three segments, I would say. One, which could be promoted by foreign companies where the shareholding from the foreign promoter could be more than 51%. The second segment would be joint ventures with foreign companies where at least 26% is held by the foreign company. And the third segment, Indian owned companies, Indian listed companies, however, having more than 50% of revenue coming from abroad or having manufacturing assets outside India to the tune of more than 50%. These are some of the categories under which the fund will look for opportunities. And we believe at this point of time, given that many of the other pockets of the markets have run up quite a bit, this is something that allow for stability as well as reasonably secular growth in terms of returns as well.
The last segment that you just mentioned, where companies that have more than 50% exposure when it comes to the global market, that opens up the list quite widely. Any specific sectors in that category that you would be focusing?
As you can see, there are many sectors where exports happen to be the largest component in terms of the turnover. So all those sectors will be available for investments. To name a few, IT services, pharmaceuticals, auto components, industrials. There are many such segments where you would see a reasonable amount of exports in the overall turnover, and all of them could be a part of the portfolio.
Okay, Harsha, on that note, we let you go. Thanks so much for making time and stopping by and talking to us about what you make of the market more and this latest launch from Kotak AMC. Time now.